but how will all of these cues impact our own markets? Our research team joins in with the trade setup, the stocks that are likely to be in the news, and the FNO setup as well. You know, yesterday's session is something that the bulls will see some hope from, considering that we recovered after making an intraday low below the mark of 23,500. The Nifty recovered almost 200 points. The Nifty Bank recovered almost 450 points from the lows of the day. It also managed to close, but it's closed below that mark of 50,000. So that remains a point to watch out for. But the stocks that contributed, though, to that recovery were the index heavyweights, particularly Reliance Industries. After some positive brokerage commentary that came in, that stock held on to gains all through the session. Firstly, kept the downsides in check and then contributed to the recovery. It was ably supported by ITC and TCS ahead of its results as well today. But there was pain in the broader markets that saw no recovery in yesterday's session. Both the mid-cap and the small-cap indices ended with losses of 1% to 1.5%, and there was plenty of stock-specific action within the broader markets. A lot of these high-flying names saw profit booking. Dixon, Keynes, they were up 150% in 2024. Paytm too recovered from its lows, made a new high above 1,000 rupees. That saw some negative news flow coming in yesterday, so that took a bit of a beating. But these beaten down MFI names were on focus yesterday. Look at Spandana Spurti, Credit Access Grameen, even LTI Mindtree, one of the worst performing IT names of last year. That saw some more brokerage commentary coming in as well. So that stock ended higher. But today's session, 23,500 remains that key level to watch on the downside for the index. But that 200 DMA, though, even though we recovered from the lows, is still significantly away from that 200 DMA level. And that is important for the Nifty to cross for further upside. All eyes, of course, on TCS's results today. That may be a key determinant of how the IT sector reacts as a whole, and then, of course, on the index. And, of course, the non-farm payrolls data that will be reported on Friday globally. That will be a big global cue to watch out for. And, of course, today the AMFI data that you need to watch out for. That will give you an idea of how the flows are panning out in our own markets. But for now, the GIFT Nifty is indicating a slightly negative start for our own markets. You see if we recover from those opening lows. Over to Abhishek now. List out the stocks you need to keep an eye out for today. Abhishek, good morning. What's on your list?
Good morning. So to begin with, BHEL, they have commissioned, their hydroelectric project in Bhutan. There are Q3 updates coming in. With respect to Tata Motors, JLR, the retail sales are down 3% YOY, while the wholesale sales are up 3% YOY. PM Gadgil Jewellers, they saw consolidation growth of 24% YOY, with retail at 44% growth, franchisee at 87% growth, e-commerce at 98%, and diamond revenue growth of 40%. Now, Acme Solar Holdings have commissioned a capacity of 62 megawatt and 28 megawatt of solar power projects in Rajasthan. Anand Rathi Wealth, they will consider bonus shares to the shareholders on 13th of January 2025. Lupin, they have received an EIR from US FDA for their Pithampur Unit 1 manufacturing facility with voluntary action indicator classification. Manappuram is in focus. RBI has lifted the restriction on Ashirwad Microfinance as well as DMI Finance. So all four NBFCs which had restrictions from RBI have now seen the restrictions being lifted off, and Ashirwad is a subsidiary of Manappuram. NMDC, the board has approved incorporation of a wholly owned subsidiary and also opening of license offices at Dubai, UAE, Brisbane, that is in Australia. Z Media to consider fundraising on 13th of Jan. Back to you.
Abhishek, thanks a lot for that. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. Smart recovery from the lows yesterday, but what's the FNO data indicating?
Well, there was smart recovery indeed. If you look at the Nifty Bank, the mid-cap index as well. In the second half, in particular, it was led by all the heavyweights. We had Reliance, which was holding off one end through the day. And then in the second half, we had some buying coming in on ITC as well as TCS ahead of numbers today as well. But what's interesting is that, despite the sort of selling that we've seen on two occasions this week, we haven't gone below the 31st December low of 23,460. So that should give bulls some support and some hope as well. But, what keeps bears also active is the fact that the Nifty over the last 5 trading sessions has been making lower highs. Jan 2, same time last week when we saw that big bazooka move on the Nifty, the high was 24,227, and from there on, every subsequent day, the high was only lower, with yesterday's high being around 23,751 itself. And the reason why the highs are lower is because, one, on the way up, the FIs are selling in cash market. Yesterday, too, that number increased to 3,400 crores. And yesterday, also, they sold a little more in index futures, close to around 1,350 crores. And this makes their short contracts around 19,000 added over the previous trading session, and net contracts at around 2.38 lakhs on the negative side, which is the highest that we've seen in this series itself. Long proportion at 19% itself. Ahead of weekly options expiry, they've also written more calls than puts, telling you that maybe on the way up, they are expecting some congestion, which may be a fuel if the market was to move higher. What are the levels we're looking at? 23,700 call, fairly active. 23,650 put, equally active as well. So the broad range is 23,550 to 23,800. Were we to cross the 200-day moving average, we'll see a bigger move, a lot of short covering on the frontline indices. Just keep an eye out on L&T Finance. It has entered F&O band.
Indeed. Mangalam, thanks a lot for that update. 23,923, the level to watch on the Nifty.